Hey, puppy trades! Chill Friday. Very chill Friday. I got some cash. I got some physical silver. I got some food. And I got two ETFs right now that yield 70 to 100% on Tesla and Coinbase that I can now pair with ETFs that run the out of the money synthetic covered call strategy. I can pair them with something that is essentially selling synthetic put strategy income collecting strategy. So anyway, that's what CRSH does for Tesla. That's what FIAT does for Coinbase. So I did enter, and I had already entered this, but it really kind of hammering down the details. I did enter a combination of TSLY, TSLP, and CRSH. I believe it was 40% Tesla, 20% TSLP, and 40% CRSH. And I already owned Tesla and Tesla. I bought a pretty nice dip in those. It was a lump sum position. I bought that, I think, January of 2023. Collected the dividends from Tesla. Made about 70-80% return on Tesla. And then I switched to TSLY and TSLP so I could buy more shares, take a larger position, and essentially hedge the yield with, instead of an option that loses money, a selling option position through an ETF that will hedge Tesla, and I believe FIAT will work like that for Coinbase. In Coinbase, I'm extremely in the money on that position, so that's one that I'm happy to add to. But there's one stock that I bought this week. It wasn't hedged. I've actually bought 2 or 3 stocks this week that weren't hedged at all. I added to my LEAP position on Co-Diagnostics, and I bought some YMAX before that ex-dividend date. But I also bought MSTY. That was a nice little position, and I posted about why I was very nervous that MSTY was going to run off, and so we had some funny stuff occur. But anyway, man, what a day to wake up and think that fundamentals would make sense, right? We'd have this kind of scare event, and all the blockchain, all that stuff that's digital, exploding and ripping. Silver down, so I did buy some physical silver today. Anyway, they say, I ain't ever told no lie. I told you guys one lie. This count was a little conservative, and I think I told you guys I thought it would be conservative, but when I bought MSTY, this is what I really think of MSTY. I wanted to show this Wave 5 view because it lines up with Bitcoin, but I've talked about with BTBT, Mara, Marathon Patent Group, and some of these other coins. Look at that, boom, perfect. Perfecto Mundo, ABC, right there, the 100% fib turns around immediately. And I was looking for 1, 2, largest high on the RSI for wave 3, shallow wave 4. So I was looking for at least another high. I actually think Bitcoin's going to go to 89,000 at least. That comes from the length of wave 3, place at the wave 4 low. That's one way to get the wave 5 target. Another way is to take the length of wave 1 and placing it at the wave 4 low. That's going to make it only a marginal new high for Bitcoin, 77,500. This goes up to 87,800. I told Joanna that my target was 89,000, and that is still my target for Bitcoin. And so as Bitcoin gets up into the 70, 80-ish K range, why am I not going to be super duper afraid that it's going to end this real 5 super quick and crash? Well, I'm using correlation evidence. So I own BITO, I own YBTC, and I also have a very nice in the green position on BITO, as well as Bit Digital, BTBT, and I also own BAT. So I have plenty of things that aren't covered, and so I can collect dividends from CONY on Coinbase, MSTY on MicroStrategy, and YBTC, capping those Bitcoin dividends. Anyway, let's get back to MicroStrategy, because I think just this chart gives a little interesting information in line with another chart, another graph that I really enjoy looking at, the blind average total test return. So some people tell basketball players and guitarists, hey, if you want to be a pro, the basketball has to become part of your hand. If you want to be a guitarist, the guitar has to become part of your hand. I would say to the aspiring quants, the ETF total return calculator, this being free, it's got to become part of your hand. It's got to be something that is, it's got to be something. You're looking up a song, you go to the ETF total return calculator. You hear, some funny thing you like, you want to go open Twitter, you accidentally open up the ETF total return calculator. It's got to be like that. My favorite test is the blind average test. So this is just blindly averaging in, taking advantage and harnessing the volatility. Why do I do this? Let's just look at a different one. We can see MicroStrategy MSTY paying this massive 100% dividend yield, 110% total returns annualized on the blind average test. That's not gonna mesh well with people who think that these are scams just because the expense ratio is 0.99, the dividend's high, so they think this whole strategy of selling options must be a scam. So they're not going to like to see those hard results. Let's look at some hard results about dollar cost averaging, because a lot of people, this is a pretty controversial topic. We're going to look at someone who was bullish oil, and so they invested in an ETF called OILK, which pays a pretty handsome dividend from oil. I think they sell some options too. We can see that if someone invested in OILK and reinvested all their dividends the day that the ETF dropped, 9/29/2016, a very rough period for them that they had to hold through. They keep reinvesting dividends, and they're at a 1.48% total return. Now, let's look at what happens if they just blindly average into it. They say, I'm going to make the same investment every month instead of a lump sum investment. So I'm going to harness that volatility. There's going to be times when oil goes up and I average up to a winner during an uptrend. Let's see what happens to OILK. We go from 1.48. We go from 1.48 to when it's blindly averaged into, the return explodes to 6.91%. So very big benefit of dollar cost averaging. What does retail get wrong about dollar cost averaging? Well, they think that a volatile thing like oil, it's bought one day, it's down 5% the next day it's bought. No. It's all about dollar cost averaging over time. Volatility is something that takes place over time. Time itself is just measuring volatility, the amount of events that happen within a span of time. So when people say time is speeding up, they're referring to the volatility of the world. More and more events happening, and kind of ever since the Cambrian explosion, I guess that's been the case. But taking advantage of volatility, that's the real key. So let's look at BITO one more time. We did it with oil. Let's try Bitcoin. Someone's bullish Bitcoin, right? So they take this big investment. The day BITO comes out, even with the dividends reinvested, negative 8.28% return. Now watch this. Isn't this crazy? Because it's the same Bitcoin bull. It's the exact same thesis. It's the exact same guy. It's the same person. All they're doing is picking their asset class, and they're choosing to harness the volatility and have it work for them, as opposed to essentially being in a casino. Let's look at what happens. This is going to bring the exact same date, the nearest dates. We go from negative 8% total return to a 43% annual return. Isn't that crazy? We quintuple and we sextuple for oil, taking advantage of that volatility. Bitcoin, we went to a completely, this is like a 6 or 7 times better return, going from a negative 8% total return annualized to a big winner, a big positive return. I'm pretty sure this beats SPY, right? So someone could have been completely wrong about Bitcoin, And just by taking advantage of that volatility, what happens? They beat SPY. Isn't that crazy? They double the returns of SPY. Someone would have looked like the biggest idiot in the world saying, I'm going to blindly dollar cost average into Bitcoin versus the S&P 500 on October 20th. But what did we just see? Taking advantage of that volatility beats the S&P 500, and it allows the Bitcoin bull, the oil bull, to harness that volatility and have it work for them. So anyway, that was a little bit of a tangent. Did I really lie to you guys? No, I didn't lie to you guys. I always tell you that I want to give you the most conservative target first, then I want to get you to know what I think is really going to happen, I guess. And a lot of times, sometimes what I think really is going to happen is the conservative thing. So, we're at an interesting point where people aren't really sure if when Bitcoin is in the 80K range, 70K range, upper 70K, upper 80K, if it's going to crash immediately. It might. And so one of my famous sayings, I think I invented this, correlation analysis killed the cat, not curiosity. And of course, I'm referring to the dead cat bounce, right? They say curiosity killed the cat. And investing, we have this phrase about the dead cat bounce. A cat's going to bounce. A dead cat's going to bounce if you throw it off a building. So, just the idea that you can't just always buy a dip because it's bouncing, because a dead cat's going to bounce. Now, I don't think the physics behind that is interesting. And I also noticed that people from Florida are weird with cats. They got strange stuff about cats. People in Florida have weird sayings about cats. Like this guy I knew from Florida, he really introduced me to finance. Maybe that's why I'm so zany. He was one of the big influences, one of my first big finance mentors. He had all of his certifications and everything. But he would always say, there's many ways to skin a cat. And I just look at him like, what the fuck is going on in Florida? Like, what the hell are you guys doing? Talking about cats are going to be skinned. And like, that's like a common thing. I don't know, man. But anyway, there's many ways to skin a cat. There's a few ways to look at Bitcoin in MicroStrategy. So what was I saying? And is this still a bad idea? No, it's still a good idea to know that this is the conservative count. At the time that I made this, remember, MicroStrategy was right here. So, me saying MicroStrategy was going to go from 1,000 to where I'm about to tell you it's going to go, in my opinion, wouldn't have been a good look. I wanted to give you guys the more conservative view first. So what was that view? From this low, this is a wave 1 and a wave 2. This is a wave 3. Now, let's examine this real quickly. Bitcoin, wave 3, makes the highest high on the RSI. You can see it. That tippy top candle right there is the highest high on the weekly RSI. Shallow wave 4, marginal new high expected for wave 5. I've got 89,000 as my official Bitcoin price target. Keep in mind, I've predicted Bitcoin to go up 400, 500% several times and called numerous bottoms and ABC corrections perfectly. I'm going to try to do it again. Anyway, all right, I already did it again. But anyway, let's look at MicroStrategy now. Get your glasses out, Grandpa. Get them out. Where's this highest high made? It's actually this green candle right here. That big green candle is where the highest high is made. There's a wave 4 correction. It looks shallow, but that's a correction. And then a wave 5, we look, has Momo at that wick right there. Wait a minute. Wait a minute, puppy trades. And wait a minute. Why'd you take the length of this whole rally and place it at this low if you usually find the wave 5 target by taking the length of wave 3 and placing it at the wave 4 low? All right, you caught me. You caught me. I ain't never told no lie, though. What do I really think is going to happen to MicroStrategy? Let me tell you something. I'm going to collect massive dividends from MSTY. I'm going to keep holding BTBT. I'm going to keep holding BITO. and I'm going to keep holding BKKT, and I'm going to keep holding Litecoin. Those are all uncovered positions. I own YBTC, and I own CONY. Those sell covered calls on Bitcoin and Coinbase respectively. And I also own MSTY. I also have a 240-270% gain on Coinbase Commons. I shared that with you guys when I blended Coinbase with CONY. So what's the point of this video? What's the whole point? One of my, I've talked to you guys about hedge positions and dividend collection and diversification and stuff. One of my speculative positions right now is longing MSTY. And I think that this is going to be a position like I have for NVDY, where I'm making 130% total return from NVDY because I bought it in the low 20s. Now it's at 26, 27, paying 100% yield from that price, but I bought it from the 20s. So I'm actually expecting that MSTY is going to go up. The dividend, actually, I'm expecting is going to grow with those option premiums. And so one of my favorite speculative trades right now, and this absolutely isn't investment advice in any way, but I am going to share this with you guys, is blending Microstrategy with MSTY. Now, it's also very interesting. We have a spot Ethereum ETF coming up. And if we look down the gauntlet a little further, Microstrategy has a very, very close cousin named Coinbase. And Coinbase now has an ETF like Tesla's ETF, CRSH, that could potentially be a hedge position. So these are all things that I'm thinking about. Potentially massive dividends coming into my portfolio. And now a spot Ethereum ETF. Physical silver, pretty low. What I told the guy at the metal store today, I bought physical silver today. What I told him was I was going to take all these option premiums from all this fake money, right? Because he's a silver bull. He works at the silver store. I was like, I'm going to take all these option premiums from all this fake money, and then I'm going to, transfer it out of my brokerage account. I'm going to give it to you guys. I'm going to buy real silver. And he really laughed at that, but they really liked, hearing that. So I didn't tell him I'm going to buy the spot Ethereum ETF too. But let me tell you what I really think about MicroStrategy. All right, you guys have heard enough. Let me tell you what I really think about MicroStrategy. I never told no lie. I don't know one lie about this. I actually think this is wave 1, wave 2, wave 3 is this candle right here. This is wave 4, and this wave 5 that ends with momentum divergence is completing something. What's it completing? Oh no, they're not gonna like this. Yeah. This is what I think. So with MicroStrategy having this stock split so soon, I've already got an MSTY position. I've already got a Bit Digital position in the money, and I have a Bitcoin position for BITO that's crazy in the money and still paying me dividends. And I've got a Coinbase position from CONY. I made a 240% return, and I'm still getting crazy dividends from CONY. So I'm thinking that this is going to be one of my speculative winners. MSTY, and pretty soon blended with MicroStrategy, ideally after the reverse split. We'll see if we have that much time. But what I really think is going to happen, I think this is a wave 1 and an A, B, C wave 2. I think this is 1, 2, 3, 4, 5. Another wave 1 and an A, B, C correction that ends at the 127.2% extension, as well as the 61.8% retracement of this rally. So that's not actually of this rally. That's for the wave 4. That's how the wave 4 was found. I think we're going to get all the way to the 50% retracement, 132.56. So we get down to the 50% retracement. That says that that's enough of a correction. It could still be a wave 4, but that's enough of a correction to complete that whole cycle. We go a little past that. what I actually think is going on with MicroStrategy, and what's the big difference? The target is the same. I'm still looking for what I told you guys, that MicroStrategy is going to go close to 3,000 pre-split, 2,876. The length of wave 1 places the wave 2 low, and that wasn't too different from if it was a wave 4, the length of wave 3 places the wave 4 low. MicroStrategy was going all the way up to 2,600, about $150 shorter. But what I actually think is going to happen is that this isn't a 1, 2, 3, 4, 5. So when MicroStrategy gets up here, I'm looking for big crash. I actually think something much different. It's time for MicroStrategy bulls and me as an MSTY bull to chill. Just chill, man. Just relax. Breathe. You know, these might be the good times. What could really happen? Well, MicroStrategy could go all the way up to 2,876. And that'd be great because the call premiums for MSTY would be massive. There'd be some capital gains, albeit capped from MSTY. But if MSTY was blended with MicroStrategy after the stock split, then there would not be cap gains on the MicroStrategy commons, only the MSTY position that's paying a massive dividend. I actually expect the yield to go up higher than 100% should MicroStrategy rally. And what it's done, it's gone wave 1, wave 2, it broke this high. Notice the length of wave 1 places the wave 2 low. If I just copy and paste that, that was right where we got both of these wicks. That's something that I've picked up on after years of studying the market. So I believe this is wave 1 and wave 2, and the bulls actually got Elliott wave confirmation of a wave 3, the perfect target, 127.2% extension is how I got it up right there, 2,100-ish, before a shallow wave 4 and a wave 5 higher. So it's still taking MicroStrategy up towards 2,800, not too different than 2,600 for a wave 5. But what's the difference? This time, those 1, 2, 3, 4, 5 waves, they don't end the wave 5, in my opinion. They're going to end the wave 3. So when MicroStrategy has a wave 4, all these massive dividends from MSTY can keep being compounded during this primary red wave 4. So think about this. I'm not even thinking about MicroStrategy at 2,890. I'm past that. I'm thinking about what happens when it's in this red wave 4. So I'm planning for a correction from a price point that hasn't happened yet. And I believe that during this red wave 4, I'm going to be very thankful I own MSTY. I'll have collected all these dividends, so that position will have paid for itself. And then I can keep reinvesting these dividends into MSTY or another vehicle, expecting that this wasn't the end of a large wave 5. It was the end of a large wave 3. There's a shallow wave 4. And then what? Another wave 5 higher. Yes, another cycle of MicroStrategy rallying, call premiums going higher, and then what happens? That ends the black wave 3. We begin another premium collection phase. I think this might be a little contrarian to what people are being told, and it's absolutely not investment advice, but this is how my portfolio is being positioned right now. That MicroStrategy is nesting. It might be time to sit back, relax, collect some dividends, funnel it into Ethereum, physical silver, and cash before,